And we're live, another show at the Savvy Real Estate Investor Podcast. Pretty excited today. We have Jeff Davis. He's from Houston, Texas, and he is in global sales for a logistics company. I'm pretty excited about digging into this topic today because logistics and supply chain is a very hot topic nowadays. We see go to the store and we hear like how many things are lacking as far as products and services, right? So that's just something that Jeff is very in tune with, and is living um, his day-to-day job is tied to that. And he also is a multifamily investor. He owns 952 doors as of today, and he is on track to be in just over 1,100 doors here pretty soon, closing his next property. Hopefully, we can talk a little bit about that. Um, and let's welcome Jeff to the show.
Thank you very much, Satch. I really appreciate your opportunity to be here. I know we had some back and forth, but awesome to be here and talk about supply chain and real estate.
Yeah, I love it, man. So let's address that elephant, the supply chain. What's Tell us a little bit of background on how did you get into that, and what's going on in the back scenes that most people that you what are some interesting things that you think most people don't really know, kind of like me, right? I'm not in that supply chain stuff.
Yep. Well, I started in 2005. I actually grew up in New Orleans, moved here into Houston from New Orleans, like many people did after Hurricane Katrina. And I fell into logistics, right? I didn't study it, but I started as a data entry clerk um, at a global freight forwarder in Houston, and worked my way up, helping clients solve problems, and have been a global sales executive here for about the past 10 years, uh, working with customers all over the world in different verticals, whether it's furniture or energy related, and energy can be solar, wind, power, uh, all verticals, moving product all over the world. And it's been largely behind the scenes for most of my career. My parents have often asked what I do, and I've tried to explain it to them, and nobody has known what logistics is. It's until COVID, because that's when it became very visible how fragile our global supply chain is. And that's when clients began escalating our conversations up to the C suite and to the executive level of their organizations, because it had to be.
So, give us an example of something that you do as far as, for example, you say you're in the furniture, can be energy, solar, wind power, one of those topics, right?
Mhm.
What's your role in a furniture company?
So my role would be that if a company, let's say a supplier to Costco, if you go to Costco, you'll see many different furniture items there, or rooms to go. They do not typically buy that furniture themselves. They have numerous vendors, and those vendors range in company size. I work with those companies, those vendors, to provide the transportation of product from Asia, which could be Vietnam, it could be China, it could be Malaysia, and move that product into their distribution network here in the US. And in some cases, depending on their agreement with those large retail box stores, even getting it to the individual stores.
So you're like in the middle. Do you know, for example, like Costco needs this many pieces of furniture, and you know the vendors that provide us that type of furniture. So you know, okay, I gotta get these vendors to send this much furniture to Costco. Is that kind of like, am I
Mm,
under?
No, I'm not at that level. Costco's gonna Costco a retailer like Costco has a pretty dialed in supply chain source, and a robust supply chain division. That's where their company is going to take care of that. Costco, a Sam's Club, Walmart, Home Depot, Lowe's. That's where they're going to dial into their inventory levels and identifying with their suppliers what they need and the purchase orders to keep their stores stocked at all times.
Got it. Got it. So then, how can you? So I'm not obviously I don't know, I'm not too experienced with this topic, right? So we go to the store right now for this is more like a everyday topic, right? We go to the store, we see the toilet paper is missing, we see that maybe there's not as much chicken or beef or steak on the racks, right? How
Yep.
does that look back? How does that look behind the scenes?
So I don't deal in foods. I will deal in consumer items, so I can't speak too much to the fuel or to the food products and consumables. But in terms of consumer items, toilet paper, and furniture items, and even oil and gas products like valves and pipes, what's happening there is those overseas transport vessels, your ocean carriers and your airline carriers, they got uh, supreme or a heavy overload of demand. Demand spiked up. However, the capacity of vessels and the capacity of airplanes did not match that demand level. And in addition to that, the port capacity of labor actually shrunk because we had COVID lockdowns all over the world. And that created kind of the perfect storm where you didn't have enough labor to offload vessels. You had a 50 to 80% increase in demand of cargo demand, putting containers on those ships. And it's where were they going to go? The ships were just hanging out at the docks for more time than what they are built to. So more ships piled up at every single port. And over the course of weeks and months, it just created a backlog where these ships go on a rotation, 14 days each way. And now it was taking 14 days just to unload, and then 21 days, and then 30 days. And it just completely unraveled. It was like a spool of string that unravels and you can't put it back together.
What do you foresee? And now let me just recap that portion right there. So it's not really. I kind of picture this in my brain as a linear growth, just because population
Mhm.
increases. So demand for things increases gradually like that. But because we had that period of time where nobody went to work, people were laid off, everything happened. That's when all this demand started increasing, and it started getting offset versus the amount of things that were being delivered, right? So by the
Yep.
time everything started getting back online, that's when that big backlog
Yes.
happened. Is that correct? Um, what do you foresee? Is there a point like is that or like are those I don't know how to picture the graph, but are those the supply and demand? Are they slowly getting back together, or are they still like trending parallel to each other or away from?
I think they're more parallel and going together now. And you were absolutely right. Everybody's locked down, and you can order anything you want on your phone. You know, the new generation has the expectation of if I buy it, it should be here tomorrow, which was that increase in demand. And there was less going out. Nobody went out for restaurants. Nobody was traveling. Everybody was staying home and buying stuff. You know, everybody's redoing their garden. One interesting fact: pet supplies. The number of pet supplies and pet goods imports went twofold because they wanted a pet, so they needed more pet goods. So, just a interesting fact for you.
Dude,
Uh, Now, to answer your question, yeah, it's getting much better now. And it's, you know, the carriers are trying to manage their vessels a lot better. They do not make money when their vessel is sitting at the port. And people are starting to travel now. I don't know if you have been on the road, but here in Houston, it is traffic all the time, and it has been for a year. People are going back to work. They're eating out. There's concerts now. So the consumer is spending their money on other items that is not just goods that they can order. And so in June, we saw a 50% drop in demand for imported goods, 35% drop of imported goods from around the globe, but about a 50% drop from Asia. That's reflected in the pricing. Not all pricing is being dropped, and not all transit times are being or helping, and that has to do with how the vessels are routed. But that's a good sign of how your demand is kind of coming down, and the supply should correct itself. The stores have a lot of inventory of consumer items in their distribution network, so probably about 9 to 12 months out from seeing some normalization.
Is it always prior to COVID? Was it always is it always sort of like very when you're looking at that supply and demand? Is it very linear, and is it very tied together, or is it there spikes depending on what's going on throughout the year?
Yeah, it's a fantastic question. There's actually seasonality, and we're in terms of ocean freight, we are what we would deem peak season right now, and it's determined by Christmas. Right, everybody goes out for your Christmas shopping. The stores have to have their product in the stores. Well, in order to have that, they've got to order and have it on a vessel by right now, between now and no later than September, because it's going to have to travel, arrive the U.S., and get through the distribution network. And we're actually seeing a very soft peak season right now. So
Wow.
this is the season for ocean, and then peak season for air freight trends about 6 weeks later than that. And so we'll see what the air freight peak season looks like. And that's usually geared more towards your technology, your laptops, your TVs, and especially your cell phones. They dictate how good the peak season for air freight's going to be.
Wow, that's pretty interesting. It's funny how we don't as normal if you're not in this industry, uh, or if you don't follow any news closely tied together to the supply chain, you might go to your own furniture store or grocery store and you don't think too much of it, right? You just see the item is there, but you don't think all of the other everything that went through to just get that one item to that store.
Right. Yeah. And to tie it in, right, to what the consumer's feeling, and maybe why demand fell off, I'll give you numbers. For most of my career, a container price from China to Houston has been between 3,000 and 4,000. This is a very consistent price, and we're battling it out, me and all my competitors. Uh, and so it's peak season. It's going to be a little bit higher because everybody needs the space. And so if you're a furniture importer, which is a competitively margined business, right, and you're all of a sudden paying higher, then your margins get squeezed. During 2020 to 2022, the those $4,000 prices quickly escalated to $25,000, and in some cases $30,000. There
Wow.
were importers at LA who were paying $20,000 to $25,000 just to Long Beach, which is anywhere from normally a $1,700 to $2,000 price. That's that's your inflation. That's one aspect of your inflation is something that is 10 times a line item budget. A company that is used to paying $500,000 a year in transportation is now paying 5 million just to move it, not buy the commodity, not buy something, just move the shipment to make it available for you and me to purchase.
And the increase the reason why that increased is because of the demand.
Yes.
Yep. Wow. It's pretty interesting. So just that one little lever moves, and it causes all trickle down all of the increases in prices and everything that
Hmm.
we see. Uh, sure, it ties to the gas. Can we tie that to gas as well?
Yeah, so gas didn't have so much of an effect on that because that was not tied to fuel. Sure, the vessels run on a very cheap type of fuel, but throughout 2020 and 2021, fuel wasn't very expensive. Those prices on that logistics piece really have not been felt by the consumer until around quarter 2 of this year. And it is my belief that that is what has kind of spiked this or made this drop in demand. And so now you couple, and this is where we'll talk real estate, right? You couple a increase in fuel at the gas pump, the realization of these increase in the cost of goods sold uh, with the average consumer has caused this drop in demand. And so now prices will are coming down on the transportation side. The demand is coming down, and hopefully in 9 to 12 months, all of these things kind of correct itself for consumer goods as the supply chain corrects itself. But the consumer's feeling it, right? The everyday renter and homeowner are feeling it. So as it pertains to real estate, I know I monitor that when I'm looking at a value add. We can increase the rents 12%.
Yeah, yeah. Let's tie in this. Can we tie in some of this like supply chain as far as like lack of apartments and houses around the country to the cost for the pretty big increases in rent year over year?
Yes. So one of the big challenges for apartment investors from ground up to value add has been the availability of materials. I mean, if you got into a deal in 2019, you're closing, and then you're waiting for your cabinet, they were gone. And a lot of granite countertops pre-cut, those are coming out of China. That was very hard to come by, and a lot of operators were in a real bind just trying to source the basic materials: doorknobs, handles, light fixtures, plumbing fixtures. Like I said, cabinets, and many are sourcing those pre-cut granite or other types of countertops. This all comes from Asia. And some granite comes from South America, which has its own supply chain problems. This really delayed a lot of operators on executing their business plan in budget, within their budget, right? Because you figure if you were factoring a $4,000 container to get it to site, and now it's 25,000, and you've got 10 containers, that's a massive increase. And you were figuring it was going to take a month to arrive. Now it's taking 90 days. These things really put stress on an operator, and there was no clear cut answers. It was lots of questions with just a moving target, which can be very, very difficult for anybody doing a ground up construction or a value add or a house flip. I was in the middle of that, flipping houses. It was
Yeah,
challenging. It was challenging.
yeah. So then would you say that they very the lack of inventory in rental house like in apartment complexes and houses can be tied to a lack of inventory, right? There's not
Mhm.
many places to rent. There's lack of multifamily apartment complexes out there, and because of that, there's just more demand for the ones that do exist, which
Yeah,
causes rents to go up, right? Is
absolutely.
is this lack of apartment complex inventory is something that was caused in this past like 2 3 years, or is it something that has been trailing since the last 12 years?
I don't think it's for the last 12 years. I think it's the past probably 3 to 4 years. This increase in housing demand has been yeah, the last 2 to 3 years, especially in specific markets. Texas has seen a huge boom. Tennessee, Florida, that has seen a significant increase in demand, and these material shortages are going to make it harder for builders to catch up. That's going to make the supply and labor shortage is drawing that catch up phase out. I believe the number that I've seen is about 5 years.
So another 5 years before we are stabilized to where the supply and demand run parallel. But even then, that doesn't mean that rents won't keep increasing. Right? There's still natural rental increases year over year, just not as extreme as they're at right now. Is that correct?
I agree. I agree with that. You know, you don't want to be you don't want to kill the goose with the golden egg. You want to be a good steward of the rent base. Um, they're going. Everybody's feeling it at the pump. Everybody's feeling it at the grocery, and uh, having a 12% year over year rent increase for the past 18 months to 2 years, that's not sustainable for 5 years out. That's significant. So that I don't think that's realistic. I mean, in some markets you could probably increase a few points over time, but I would just be real cognizant of what is the income, what is the market really dictating.
Yeah, you bring a good point there that I feel like not many people talk about, which is the income, right? When you're buying an apartment complex and you try to see what rents are for in your apartment complex, you want to see what the median income is for that area.
Yeah,
Right.
it's
And
it's the first thing I look at.
yeah, yeah, and definitely super important, right? You want to make sure that not only with currently can they afford it, but can they afford it 5 years from now as well, right?
Yeah,
And
which means what was the income 5 years ago?
right, right.
Yeah.
Um, how did you get started in the multifamily?
It's actually an interesting path because I thought that I was going to get into it back in 2019, and I have a private money lender who was working with me on some flips, and we traveled together to a Sumrock event in 2019 in Dallas. He's in Houston, so we drove together, and we enjoyed it. We networked a whole bunch, and I remember riding back and telling him, I'm going multifamily. That's the only way to go because of growth and all the correct metrics. And I said, I think I just like transacting many more deals by myself. And it just seems that I can transact a lot. Uh, I'm going to wait for this multifamily thing to cool down. and, you know, watching him, and he found some partners, and they're good friends. I'm actually an investor in a couple of their deals now. By last year, I was actually just killing myself with all my single family. And I called them and I said, all right, man, I give up. This 1 o'clock bringing materials to contractors, I'm all done. This is not this is not sustainable, and it's not scalable. Please. So did a lot of talking with them last year, got into the same ecosystem that they are in, and it's been off to the races. It has been so much fun. And so in that ecosystem, got into another mastermind and have met nothing but many like-minded people and investors, and working with brokers and finding deals. It's been pretty awesome.
Yeah. Have you completely shut down the single family rehabbing business?
Uh, I don't want to say that I'm closed off to it. I enjoyed it, but it would have to be within this such a small buy box and it's hard right now because prices are so elevated. But it would have to be, within 3 square miles of my house and an absolute slam dunk. Just like I wouldn't turn my nose at a rental. Um, it's just my buy box will be very small for something like that. I'm all in on multifamily.
Yeah. So even if you were approached with a single family home rental, you will consider it if you fit the buy box.
If it fit the buy box, yes. Yeah,
What's the cash flow that will be acceptable to you on a single family home rental? That like net cash flow after all expenses,
yeah, it would have to be about 500,
500. Yeah.
which is way more than what I was making on my rentals.
Yeah, yeah, that's kind of what I figured too. We were just considering one with my partner yesterday, and I'm like, dude, I don't want it. I don't want a single family home rental. But and he was surprised to hear me say because they were gonna, the seller wanted terms, right? She was considering selling the property on terms,
Oh,
and
wow.
so I said, hey, if it's terms, and we're already getting it at a big discount, even with terms. I said, I'm down for it. He was like, you're down for a single family home rental? And I said, I mean, I don't want it, but sure. I mean, why not, right? And to me, there's the cash flow. And I don't know what you think on this, but the cash flow from a single family home is not really what makes the single family home investment uh,
Lucrative.
attract lucrative, right? Is the appreciation over
Yeah,
time, because the cash flow, dude. If most people aim for a $200 per
yeah,
month cash flow,
yeah,
right?
yeah.
Dude, the AC goes out and you're done for the next 2 years
2 years.
in cash flow.
I
And
know. I know. Yeah.
so to me, there's no profit there, but the profit is in the appreciation that happened on those years that you hold it and then you sell it, right?
Yeah. And I mean, I would tell people like coming up in the next few months, we're going to have a couple more rate increases, at least one. To me, that's the time to buy. I made good money if you buy one at a higher interest rate. Rates will go down in a year or two. Prices probably going to go up again. There's your kicker of appreciation. Like
Yep.
that's when you win.
Yep. Yep.
And you're absolutely right. It's not about the cash flow. Um, that's kind of how I would look at it. Though is I know I'm going to appreciate. There's some headache that goes with that single family aspect. That would be my buy box. You know.
Yeah. 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 You got to put a price tag on your time and the headache.
Yeah.
More than anything, the headache. Yeah.
Although if it was terms, yeah, that'd be different.
Yeah. Yeah. Sounds like you do some terms deals. Have you or are you don't do you currently own any properties via terms?
I sold them all. I actually am working on a lady in Texas on owner financing. So, I mean, I'm familiar with it. And I mean, every time we talk to a broker, that's the first thing I ask, are they open to terms? And I really hope that in the next 6 months to a year, some sellers are open to creative financing, which I kind of think they might, right? If they're in a bridge and they can't get out, we can maybe get some creative financing going.
Yeah, yeah, yeah. That would be the move for sure. What's right before we got on the podcast, you told me about a deal that you got closing here soon. Can we talk about the deal, or is it something that you cannot discuss?
It's a 506B.
Okay.
So anybody who's interested, we'll just have to talk about the next one. I'm happy to discuss it. But yeah, it's a deal. It's in Houston. It's 180 units. It's a Class B to Class B plus. We actually acquired the one right next to it for 300, and our group manages about 1,200 units within this half a square mile, vertically integrated. So it's very, very attractive because we're really honing in on this really sub market of Houston, Texas. It's a fantastic income, growing, a lot of employment by high, uh, of very large employers in the area, oil and gas. So it's very attractive, and hope to keep on working with this group and others as well.
Love that, man.
Yeah.
How? how far away are you from going full cycle on some of these apartments?
We are on one deal that I'm in. They are they've got the OM coming out, I believe, in 2 weeks on a deal in Weatherford, Texas, which is going to make some. If that closes this year, going to make some very interesting life decisions for me.
Wow, tell us a little bit more about that.
That's you start getting very large checks. I mean, I made a significant amount of money last year, and I maintained my W-2. Just made a significant. I basically invested all of it, both in education and in assets. And if this uh, goes through and it's sold, it's 2x the money, and with all the capital gains that I'm able to do, carry over losses from last year from different investments, it'd be tax-free money. So that's the kind of decisions I'd be making, right? It's a multiple six-figure type of payday, and it's kind of, hey, if what's the value of my time if these are the types of opportunities that I'm starting to generate.
Yeah. Would you be? I want to break this down because for a lot of people, they're kind of like on the fence about investing in multifamily deals, right? So we wouldn't have to talk specific numbers about your situation, but you just kind of want to give a brief outlook on how something like this looks. So like essentially, you invested in a deal and you're now getting the payout 2x. How long did it take for you to guys, if this goes through and all happens, what was the cycle of this deal? Like how many
18
years?
months. It was
18
18
months.
months. Yes.
So 18 months, you 2x your money, and now you're considering, do I keep my W-2 job? Am I correct on this? Are you considering, do I keep doing my W-2 job or do I just
Yeah.
go back into
Yeah.
it?
And there would be a discussion, right? It would be what is the outcome? What do I have in free cash? What's my runway? What does my true pipeline look like for income? Various income sources. What and then working with my CPA on that. Hey, do these carryover losses really mean this? Am I going to be subject to any capital gains, or do these depreciations off these K1s, do these losses from these K1s offset this? So it's very complex, but I love this, and if I can generate this much revenue for a W-2, can I generate this much revenue for Bridgestone Capital? You
Yeah.
can be confident I can. I'm a grinder.
Yeah. Dude, love that, man. Yeah. It just starts snowballing, right?
Yeah,
So once you get that momentum going, things start getting big pretty quickly. And
it's a
if you,
mindset too. It's a mindset, you know. And you start to think when you're a salesperson, you're always thinking, all right, I did this much in sales last year. I want to grow and I want to grow. And when you start to realize, like, I'm literally making this much in commission. Well, if I did this much last year for Bridgestone, well, don't I want to grow that and grow that because I own that company?
yeah, yeah, absolutely. It's pretty exciting stuff, man. Jeff, we're reaching here at the end of the podcast. I think
Yeah,
there was a lot of awesome information and stuff that I didn't know about regarding the supply chain, logistics, and I'm excited you got to talk about a little bit of your perspective and your own experience on multifamily syndications. The If someone is trying to get started in finding out more about syndications, whether they want to invest passively or actively, what would you recommend their first steps to be?
passively, passively. I mean, investing actively is a full-time job. If you're going to do it right, I mean, you can definitely try and go actively and do an hour a week or whatever. It's going to be a very long road with minimal success. Um, but going passively is by far the most fantastic way to get your foot in the water uh, and see real results from your money working for you. And I thought being a landlord was a way to make my commissions earn commissions. That's why I started doing this. And even that is a pretty active role of making your money work, but it's very successful. Being a limited partner in a commercial real estate opportunity, you get all the same benefits without having to go and find a deal and find a tenant and fix the AC. It is checks in the mail, wired to your account, and appreciation and all the benefits. And then all you have to do is go find another one for when that cash is out.
Dude, love it, man.
Yeah.
And I said the same thing. I started also investing as a passive investor. It's when I started, before I did any active stuff. I just wanted to see it for myself. I wanted to see, hey, I want to understand this model. I want to see what kind of results I get before I start telling other people to do the same thing that I was doing.
Yeah.
And even I still keep investing. Almost every deal that I've put together as a syndicator, I've invested my own money in the deal as well.
Yes, because you get as a GP, you're not getting cash flow.
Right.
We get paid at the end if we perform, but if you do both, you kind of get both benefits. And I will always, I shouldn't say always, but as far as I can tell, I will most likely always look for opportunities to be a limited partner. That's
Yeah.
how good that it is to be a passive investor. Is that I think that at every level of the game, people are always looking for that opportunity.
Right, right, exactly. And I was just talking about the same topic the other day with someone else that is just kind of starting to get into. Uh, he's trying to. He's a real estate investor. He does a lot of single family homes, and I started asking me about. Hey man, I think sounds like I should go into the GP side more. Right, sounds like it's more beneficial. And I'm like, I'll tell you what. M- if I could just simply invest as an LP, that's what I will do. Right. I
Yeah.
mean, I like to do the GP stuff, but I can tell you that there's better, in my opinion, there's better benefits as just being a limited partner, and because you get the cash flow, you get the tax depreciation, you get all the benefits, you don't have to do anything. And like you said, as a GP, you may get a little bit of a percentage up front for putting a deal together, and then yep, very little, and then nothing. Hopefully, um, obviously, passive investors get all their returns and everything first before anything goes back to the GP, right?
Yeah. And the GPs are doing all the work.
Yeah,
If I think if an LP understood how much work is going into it, then they would just appreciate the cash.
yeah, yeah, for sure. Dude, Jeff, this has been awesome, man. It's been
Yeah, I
awesome
really
having you on
appreciate
the
it.
show today. If there's a book you can recommend someone, what a real estate book or business book, what will it be?
Um, Man, I really like the passive investing for. Now you caught me off guard, man. Lately, I've been reading Who Not How,
Who and
and
how?
so it's probably less about passive investors, but it's definitely about understanding your strength and letting others do it, which could be good for limited investors, man. You're not really wanting to do all the work and you just want to make more money. Let the operators do all that work. let,
Yeah,
let the general partners do it, and you go do your job, and because you're good at doing your job, man, um, and you're still learning real estate.
yeah,
But Who
yeah,
Not How, I've really been enjoying that one. I just finished it. Dan Sullivan.
yeah. That's a great book. Jeff, how can people find out more about you and invest with you if that's something they want to do?
Yeah, I have a report. It's at multifamilyadvice.com, and it's got 7 reasons why we like multifamily. I've got several other reports, but once you sign into that, you'll get into my email ecosystem, and we could schedule a call. Be awesome to talk with you, and even if you have questions about where your stuff is coming from overseas, I'm happy to help out.
Awesome, man. Dude, that's pretty cool. We'll put the link in the show notes, and that way people can go to your page and download that report. Jeff,
Awesome.
it's been an awesome time, man.
Yes, sir, man. I enjoyed it.
All right, we'll see you soon. Bye.
All right.